before we talk about Marvell, I just want to mention one quick item here. I released this trading plan a couple of days ago, and so what I'm doing in these live streams is not, I'm not like sitting here and pontificating over this and setting up all of this dialogue for like hours beforehand. Like I haven't really looked at Marvel. I spent a few minutes looking at it like just now. Um, but the point being there is that it's relatively quick because I've set up a plan that I'm looking at. So if you're interested in setting the same type of thing up and like being able to follow it, go take a look at this post. It talks about the trading plan. This plan is like 18 different sections, and it helps you put together some of the stuff that I'm talking about. So if you like that, if you like the way the analysis goes, then go ahead and go take a look at that, and it's pretty helpful stuff. So so let's talk about Marvel. So here is Marvel. Here's the chart for Marvel. Just a couple quick items. It traded today from $87.37 to $90 a share. There weren't any huge moves in the market today, but there's been a lot of volatility. So a $3 shift there at about 90 bucks puts us at like 3% change during the course of the day. That's not too bad. It's down after market. The last two earnings that it had were positive, so it beat estimates on earnings per share. It had earnings August 28, 2025. It missed earnings by 0.5%, so not a big deal. But if we go back and look at that miss right here, so this is the earnings miss. We can see we're right here at, I'll measure the difference here for you guys. So we opened that bar, this bar right here on August 28th. We opened the bar at like 75.79. Earnings brought that all the way down to like 62 something, which was a 17% drop on earnings. So that just kind of gives you an idea. Like when there's an earnings miss, it can be a big deal. If we shift forward, there was this positive earnings here, and we see a similar type of thing. That on the positive earnings, we had a raise of about 8.1%. So not as drastic, but people seem to go kind of crazy when like earnings don't go well. So okay, so let's talk a little bit about how we would go ahead and analyze and trade Marvel. Same thing that I did last time, although I may run through a couple additional indicators here. So we're going to look at the day chart. So each one of the candles is an entire day of data. I'm going to turn off all of these moving averages, turn off this linear regression, and we're going to add our Ichimoku cloud. So just based on Ichimoku cloud right here, in 1 second, once you get used to this cloud, in 1 second, I can tell you, okay, this is not necessarily a tradable stock. Like we see this upward trend. Get a few lines here for you going. We see this upward trend right here in the stock, and that's over the course of some days or weeks. And then we see more recently this downward trend, which, this is 1-2 days that we've been on a downward trend. Today's Thursday, so that's Wednesday and Thursday. It's down. Not particularly surprising given the fact that like we're in this big war and everybody's worried about oil costs and people are rotating out of tech stocks and into things like oil and silver. If we look at like silver and gold, silver's down today, but gold is actually up aftermarket. Treasury notes are up, like this TNX and TNY on the right side. These treasury notes are up a good bit right now. Oil, of course, is skyrocketing, and this U.S. oil, United States Oil Fund, this USO ETF, which I traded this week, and I recommended trading it in the blueprint for the week, has exploded. It had this one day that it was down, but then it's just exploded. So we're seeing all this rotation, right? We're seeing rotation out of tech stock, and Marvel, which is essentially a custom, they build ASICs, which are like custom CPUs, custom chips. So people are kind of rotating out of that, but not as badly as some of the other stocks that we're seeing. So on the 1-day Ichimoku cloud, we're seeing this, the blue conversion line and the red baseline are in a red cloud. That's not particularly tradable. It's not shortable either. We wouldn't want to long or short the stock in this case. If we drop down to 4-hour, we do see an interesting thing here. So the cloud at the 4-hour candle, we have this green looking forward cloud. The blue conversion line has gone above the red line, and this red line is what we would consider a baseline. And then there's this green lag line, and all of those are above this green cloud. So on a 4-hour cloud, this is a tradable stock. Like, this looks pretty good. This is actually really nice. And so we'll come back to that. We won't come back to the cloud, but we'll come back to trading because we're saying, okay, well, that looks pretty good there. If we go down to 1 hour now, this is a pretty short time frame, but this is like almost telling us we want to short this stock. Like, it doesn't look good. But if you consider that on the 4-hour cloud, this one candle right here, this little candle at the very end, is all 4 of these candles right here, right? And so as you expand that out, it makes sense that we're looking at this dropping trend at 1 hour where it's not a dropping trend at 4 hours. So, but it's tradable on and a 4-hour Ichimoku cloud. Like, it's a tradable thing over a short term, right? So if we're going to trade, and this is where I like to focus, if we're going to trade options or swing trade over the course of 1 to 2 weeks, this 4-hour Ichimoku signal here, which is a buy signal, it looks pretty good. So now, same thing we've done in the past, to say, okay, for example, if it wasn't tradable, like if we looked at all of these clouds and nothing was tradable, then maybe we would go and we would just do some analysis and whatever, but like, and say, well, don't trade it, but this is for education only, right? So now what we're going to do is we're going to go back to the day candle. I'm going to turn on this 50, 100, 200-day moving average. So this is kind of one of the things that I've noticed is pretty neat about Marvell, is it follows these lines super closely. And if you've listened to any of the other live streams, you've heard me talk about whether we're talking about the psychology here, or whether of other people trading with these lines, or whether we're talking about the math involved or the probability of something. Stocks always follow these lines. They always return to these lines. And so you can see it with Marvell, you can see how closely it tends to follow all of this stuff. And so we have, if we look at the 50-day and the 200-day moving average, this line here, the one that is changing a lot, this line that kind of comes up and then it comes down and ends in the middle here, that's the 50-day. And this one that ends on the bottom, that's the 200-day. So every time we see the 50-day cross up above over the 200-day, we call this artifact right here, we call this little thing a golden cross. And every time, let's see if I can find it, another one here. Okay, so, and every time we see the 50-day cross below the 200-day, we call that a death cross. And so this death cross right here is a super bearish stance. And what we notice is that the stock is almost down at a bottom here, and it probably is in bear territory of like negative, 10 to 20%. But then right here, we see this golden cross. And this golden cross, this 50-day crossing up above the 200-day, is a super good sign for the stock based on how a 50-day changes. It has more bias, so it changes more closely to the stock. And so we look for this sort of thing when we're wanting to trade. And so right now, if we go and we look at this super closely at the end on this day candle, we are above the 50-day, the 200-day, and then this one right here, this grayish one is the 100-day. So this is super bullish stuff to be above that. And then if I go activate the 5, 10, 20, which are just intervals that are 1/10 the size, right? Look at how closely all of this matches. And so what an interesting coincidence that these three yellow lines, right, are the 5, 10, and 20. And so what we notice here is that the 81, this 81 right here, this yellow line is the 20-day, and it's lined up exactly with the 50-day. And then we have this next one up, which is the 10-day, and it's lined up exactly with the 100-day. And then there's this 5-day up here, and you notice, and now we're going to step down to the 1-hour candles, so we can kind of look at this with a little bit more resolution. And this is the sort of thing that I've kind of mentioned to you guys. Look at this. The 50-day comes up, the stock comes down, crosses under the 50-day right here. Now, I'm going to come back to this because this is where we're going to talk about the trade entry. But look at all of this action right here. Look at how closely this stock stays all, kind of interspersed in between these averages. And if you go back and you look at the previous videos, and in fact, I'll just select a total. Okay, so here's lift. Notice how far apart most of those lines are. Like you have a couple right here, but look at how far apart those are. Here's MongoDB. They're spaced out. Yeah, there's a couple that are close here, but they're spaced out. Here's Netflix. They're mostly spaced out. So if we go back to, what stock are we looking at? Marvell. Here we go. Look at how tightly packed that whole range is right here. Yeah, they're not all right there, but this whole thing is packed, and so that makes for a very strong support and resistance level. When you've got all of these things packed right there, it increases how strong the stock will interact, how hard it is for it to break away from it. And so you can see that action, right? You can see it, like it just follows all the way along on all these averages. And so let's come back to this one now. So let's look at this. So if we're wanting to set up a trade, if we're wanting to say, okay, well, we looked at the Ichimoku cloud, it said, great, you can trade. So if we want to look at this and we want to decide, okay, is it tradable? Well, here's the question that we need to ask. Does Marvell in the following days bounce back up above this line, or does it lose that line entirely and head down towards the next line? That's the question we want to ask. So tomorrow when the stock market opens, if this stock price is continuing to fall, then we need to wait. We need to say, unless you own the stock and you want to write a call option, then we need to wait. If you want to write puts on this, put options on this stock, then you've got to wait to see whether this stabilizes or not. Now, in the coming days, if it comes down and it hits this 100-day, this grayish line, the 100-day, and it bounces right there, well, that's a pretty good indication now that we could sell a put, right? We could sell something, but we don't want to be, you hear a lot of people going out and talking about buying the dip, and I buy the dip all the time. But the fact is that if you do some research, and go do it on Google, like don't take my word for it. If you do some research, probably 80 or 90% of the time that people think they're buying the dip, they're not actually buying the dip. They're just buying this little impression before the stock falls off a much, much bigger dip. So we need these levels, like these support and resistance levels are super important so that we don't buy something thinking it's a dip and we're totally wrong. So we need to confirm, does this test right here, it looks like it lost it, but we're also after market this last few candles. So does it bounce or does it just keep heading down? Because if it keeps heading down and you trade on it, then you might have just totally screwed yourself. So okay, so let's imagine, well, actually, before we do that, here are the exponential moving averages. And it's not like I looked at this in advance, right? So when I turned on these blue lines, this is the 9, 20, 50, and 200-day exponential moving averages. Look at this. This is so uncanny. They're all packed together. And so these levels, these are all of our price levels here. And so if this stock loses this 50-day, and then if it loses this next one down here, 86.21, that's our 9-day exponential moving average, then it could just fly through all of these. Like they're so compressed together, or it could bounce right back up. So let's just say that for all intents and purposes, this stock bounces up tomorrow, right? Like let's just say we want to enter the trade. In reality, we need to wait. Like we need to wait tomorrow. Does it keep going down? Like we need to find where it finds support. Like we have to find that support level. So if that's what we want to do, then we're going to step down here. We're going to say, okay, well, we don't know where we're going to write just yet, but like if I was writing a put and this went up here, like your safest bet is probably one of the, well, the safest bet is probably this 83 level, this one right in the middle here, this 10-day moving average. However, you're not going to get much premium on that. So this 86 right here, the 9-day exponential moving average, is probably a really nice place to either purchase the stock or sell a put option. It's likely we can hold on that, especially if it expires tomorrow. If it expires tomorrow, that's probably perfect. But so let's say we want to make a trade. So we're going to go to the day chart now, and I say day chart. These candles are 1 minute. We're looking at one single day here. So I'm going to zoom in a little bit. We're going to activate our linear regression, which just is giving us this trend line, linear regression trend line, and a 2 sigma boundaries on both sides. We're going to activate the Bollinger Band, which is this right here is essentially like a 20 period moving average, and then 2 sigma lines on either side. And then we're going to have our VWAP, which we talked about last week. So check this out. So this is where we kind of like, this is the one where it's like the volume weighted average price for just the day. It resets every day. It resets right at the beginning, and it calculates volume weighted average price all day long. So if we were going to make a trade, let's just say that today it held that line super nicely, that 5-day line. I'll activate it so we can look at it again. It held this line. This is the line that we were looking at a higher time frame. Let's just say it held it. Like it's no problem. Like we're good. Okay, so if that's the case, let me turn that off so that we can kind of like get our bearing here. So in this particular case now, we need to decide on a trade. And as we've talked about in previous live streams, these 2 sigma lines are probabilistically important. So what that means is that 2 sigma is, it's like 60 something percent, right, of a standard deviation, 60 some percent of the data, right? So like in order for us, if you think about like a bell curve, like a normal distribution, for us to fall 2 sigma in a price from the average price, or raise 2 sigma from the average price, is a pretty statistically large significance. It's not crazy. Like if we talk about 4 sigma, like a 4 sigma move is like, I think some people talk about like a 4 and 5 sigma moves are like, the probabilities are so astronomical that it should happen once in like, thousands of years or something, right? It still happens, but my point is that 2 sigma is not, it's not outrageous like that, but it's a big move. And so if we look at this from the beginning of the day and we say, well, I want to find a good entry point, right? Like we want to find the best entry point. Well, it's not necessarily buying the dip, right? Because like if we didn't know what the dip, we didn't have any frame of reference, then some of these look like dips, right? Like this little spot right here, this little area. Let me see if I can activate a circle for you guys. Circle. This little area right there. Oh, come on, move. That little area in this orange circle, that looks like a dip, doesn't it? But then look, the stock comes right back up. But the problem is inside these 2 sigma bands. It's inside the Bollinger Band. It's outside of the VWAP, but it's inside the Bollinger Band. And so what happens here is the stock comes back up, but then look at this one down here. This one, not only does it drop way out of the VWAP, but it's actually outside of the Bollinger Band, bottom boundary of the Bollinger Band as well. So this is like a super good entry point. And if we had bought even close to that, like let's just say we, because we can't predict the future, we don't know if it's keep going down, but right here on this, the candle before it, it drops way out of that Bollinger Band, and look at that price, 88.44. So that is, a pretty low price. Let's say we wanted to wait, right? Let's say we wanted to wait for it. And so then we wait a little bit longer. We get this one, we get another one happening right there. See where that is? This drops outside of both of those 2 sigma ranges. And then look, it comes all the way back up. It's come all the way inside of this thing, right? And so and then we get to the end of the day, and guess what? It drops again. If we look outside of these Bollinger Bands, you might be saying, okay, well, if I had traded earlier, I would have bought it at the 88 range. And if I'd waited here for this, let me see if I can go grab my circle again. I like having it might be, oh, there we go. If I traded earlier in the day, I would have got it for one of these prices, but then there's like this guy right here, right? Why? So, what gives? Like, you're telling me to trade when it goes outside of the 2 sigma band on the VWAP and the Bollinger Band, but like, then I would have ended up either selling that option or buying the stock, like, I don't know, 50 cents or $1 higher. Well, you can't predict the future. Like, you've got to jump in, you got to and that's part of how a lot of this tends to go is you at some point, you just have to make the dive. And this could have very well been the opposite. It could have dropped to $84 a share, and then it could have just skyrocketed the rest of the day, or it could have continued going lower from here. We don't know, right? Like, there's this next one here. This was at, let's see, that was at 5:34 p.m. Today, which is like Eastern time. So this is aftermarket trading hours. You don't know. You don't know what's going to happen. You can't predict the future, right? But that's where the risk management comes in. And that's why I said earlier, let's just assume that we held that level, right? Like, this whole thing is based on this assumption so that we can talk about what a trade actually looks like. But if we step back out to reality for a second here, and I go back to this hour candle, we said, hey, this thing now on the hour candle, it's all inside the Bollinger Bands, but we're not trying to make entries at 1 hour candles in Bollinger Bands, because now this 2 sigma move is massive, because we're averaging data from much, much larger period of time and adding in all of that sway and swing. But the point here is that we said before we were talking about the trade, and I'll turn some of this stuff off so that you guys aren't daunted by all of it. So we said earlier, we have to wait. We have to wait and see, does it reclaim this level? Does it reclaim this 88.33? Does it bounce back up and go above that, or does it follow down below? And that's the risk management here, is that you have to say, at these upper levels, at this 1 hour candle, you've got to say, well, is it respecting a level, or is it falling through? And it's not just math, right? I mean, we've got this war going on, and we have to decide, well, things can be mathematically perfect and the analysis can be just absolutely pristine, but if somebody decides to start a war and investors start saying, okay, well, I need to rotate out of tech stocks and into oil and whatever, well, that's part of trading, and that's why we want to manage the risk by coming in here and saying, okay, I'm not making any trade on this until it holds that level. But if tomorrow morning we came in and said, and 2 hours into the trading day, this stock, here, I'll draw another line for you guys because I like drawing lines on the screen. If from here tomorrow morning, this stock went like that, right, and it's starting to go up here, well, by the time we get above this level and we start hitting this range about right there, we can say, okay, well, that's a pretty good hold. And so if we hold, there we go. If we get to this level and we hold and we start and we hit this level, or whatever level you feel comfortable with your risk management level. Then you can turn your exponential moving average back on, and you can say, here's this 86.21. I'm going to sell a put option at 86.21, and hopefully you get the, like, now that's either expiring tomorrow, or that's expiring a week from tomorrow, or 2 weeks from tomorrow. And the risk is that this stock may indeed come down, like we're at wartime. So like if the premium payoff isn't high enough and you want to reduce your risk as much as possible, well then just drop down to this next level, right? You've got this 83.91, and that isn't going to offer as much premium, but it's going to offer incredible amounts of safety. Like that this stock would come down to 83.91 if we go back, look historically here at a day chart. Well, let's see, when's the last time the stock was at 83.91? Well, it looks like it was probably pretty recent. It's been relatively recently, right? So like, for example, here, it was down at 75 on March 5th. So that was exactly a week ago today. It was at 75. And so one person might say, well, but look at this. Look at in the last week, even with the war going on, granted there's been some drop. There's, in fact, you know what? I'll put the linear regression back in here for you so you can see. So look at that. So in the last week, the linear regression is saying that this has a really nice positive slope, right? And so maybe that makes your opinion on this stock bullish, right? But if you're saying, well, it's dropping right in the last couple of days, few days because of the war, well, then maybe that makes your stock bearish. So you take the analysis here, like you take it and you take the macroeconomics, which, by the way, came out mixed today. I think we're down. Initial jobless claims and continued jobless claims are slightly down today, so that's good. That's good news. But at the end of the day, you have to make a decision here. You have to say, well, do I feel you've got the analysis, which is objective. You have the macroeconomic data, which is objective. And then you have to mix in a little tiny bit of subjectivity here and say, do I want to approach this stock in a bullish or a bearish fashion? And the amount in either direction that you choose there determines about your risk level. So you could write that option at 83.91 if you're incredibly risk averse, and you won't make very much money, but you have like no risk. So anyway, so that's Marvell. That's a little bit of what we have going on with Marvell. And I do think it's a super interesting stock. I think that the fact that it follows these lines so closely makes it a relatively safe bet. Even in the case where it had this massive pump, it still came back. Like these moving averages adjusted accordingly, and it's still coming back and revisiting those averages. So I think it's a fun stock to play with. It's a super popular stock to play with. I don't know. We can take a look here. We could probably take a look at some options premiums. In fact, so TradingView is not cooperating. I'm clicking this button, and it's like literally not pulling up the options chain, which is annoying. I've had this happen in the past, but if you guys want to take a look at options chains in the future, I can do it. I can pull it up on Moomoo or something like that, one of the other platforms that I use, or we can do it on TradingView, and we can look at some options, potential options trades, because putting numbers to it might help kind of determine for you, like, well, you see the dollar signs, right? And you're like, okay, well, I'm willing to take a little bit of reward if I can make like 5% gain this week on the option. So anyway, hopefully that's helpful. I don't see any questions in the chat, so I suppose we'll go ahead and call it. If you guys do have any questions, or if you want a particular stock, if you want us to look at a particular stock one week, or you have a specific question about an analysis tool or something, like, just reach out, like whether it's a comment on this video or reach out to me on Patreon or whatever, and we can figure it out. So thanks for watching, and have a good evening, you guys. Take care.